Welcome to Markets Now. I'm Michelle Rook with Roose, U.S. Commodities. We did see a mostly higher trade in the grains on Friday, with the exception of a few of the wheat contracts. We were mixed in the cattle, but higher in the hogs. And Don, I'm going to start off a little different than we normally do because we had USDA reports out here this afternoon. Let's talk first of all about cattle. Cattle on feed report. We came in 102 on feed placements, 98 marketings at 93. So pretty much as we expected, with the exception of the placements.
Yeah, these cattle on feed reports, usually aren't that big of a deal because they're historic. This is as of the 1st of December. But the placement number has been an issue since the September report. Remember, that's really the report that started taking us to the downside. And, it's just the question mark continues, where all the cattle coming from on the feeders. But we're down 2%, a little bit higher than the trade thought. Probably not that big of a difference, because when you look at the months going ahead, it's going to be month after month of lower placements, Michelle, just because we're not there. We are starting to see improved weather in some of these southern areas, the grass areas. And, I think that's going to be a positive long term. But it's going to be about the demand going forward after that. And hog market, basically, liquidation continues over there.
Yeah, talk about the hogs and pigs report, because it did confirm that this hog market, or this hog herd, is contracting, right?
Yeah, most definitely. I mean, the hog industry is probably in the worst economic times that we've had since 1998. That was a hog depression. So, just massive losses going on and a lot of liquidation going on, and certainly showed up in this report, Michelle, when you have a breeding herd down whopping 3%, 97%. That's basically 120 some thousand sows are breeding herd down from what we had in the June report. But even more than that, going forward, you had the DSFEB fairwing intents down 2%. You have the Sepno fairwings down 4%. So going forward, even the March-May fairwing intents down 1%. So what it's really saying is we've got liquidation going on. We expect liquidation to continue. And there's a little bit of an anchor on that bullish theory, is that the pigs per litter continue to go up 4% versus a year ago. So a very efficient industry out here, Michelle.
So do you think that the hog market will be reacting positively to that when we reopen on Tuesday morning?
Yeah, we really should. I think, this is a market that's down here searching for a low. And if this market's any good, of course, it's going to be the demand. But long term, I say what this market is saying is that at some point in time in 2024, you're going to run into a more positive situation. Of course, we have some of those built in those deferred months, when we're into that 93, 94 month, but our dollar 100 weight, but probably not enough if this liquidation really is in place and continues.
Let's talk about the grains. Let's start off with soybeans. A little higher close on Friday, but we were down for the week, kind of taking some of this Brazil weather premium out with some of these forecasted rains. What if they don't materialize?
Yeah, we're in a flat weather market. And, like we always say in weather markets, you buy rain and sell sunshine, because in that theory is that these weather patterns, while you think that's what they are when you're looking at them, it isn't. And certainly the trade really wound up on maybe a pattern change in South America. That's going to be a big question mark, but certainly a wetter pattern than we've had here for months. Monsoon starting to kick in a little bit. Of course, December, January are the wettest months. So, we're getting, halfway through that one. But yeah, it's going to be one. We took risk premium out. We're back at some big support. This 470 on nearby corn. We've been living with that since August. Can't get over 5. And then the soybeans, same thing. We've been living with big support at 13. And of course, that one we can't get over 14. So we're at the bottom end of the range. See if we're going to add some risk premium back in here. It's not going to take a lot. The balance table on beans, when you look at this stocks and all positions report coming up here, soybeans probably at the 3-year low. Corn stocks probably at a 6-year high. So more corn than beans.
Gotcha. We have had some lower crop estimates coming out of Brazil, though, already for both corn and soybeans. The market really has not reflected that yet, though, do you think?
Yeah, I think it's one of those that the trade is very reluctant, particularly when you saw what happened in North America, where some of these areas, not much rain, and we just got these bigger yields than you thought. And I think that's the question mark. Can that happen in some of these dry areas in Brazil? You see some of these groups have really whacked the soybean crop 1 to 300 million bushels in Brazil. We'll see. I think it's going to be a tale of the combines again, but certainly when you're starting the early harvest in northern Brazil, you're pretty mature in your pod filling in central Brazil. And Argentina is going to have something to say about it. They're probably going to bounce back big on their crop. Remember, the largest soybean meal exporter in the world. They were on their heels last year, so they're probably going to bounce back, and maybe the meal market stalls out and the oil has a better chance to the upside.
Okay. Yeah, a lot to watch there. We still have a lot of season left there to determine how big this crop is, right?
We do. I mean, most definitely. And, we know it can change greatly on soybeans. It doesn't take much of a hot, dry pattern and, to take the yield down on soybeans particularly. And then along that lines, we're not even sure what the second corn crop acres are going to be, let alone the weather. I mean, our harvest there is more like late June, July, August. So, it's the soybeans now. It's going to be the corn later.
So I mentioned soybeans down for the week. In fact, all the grains were down for the week. And I have to believe a little bit of that was due to the Mexican railroad situation with the closures there on the border. It looks like that got solved on Friday. So is it likely that will take a little pressure off of the market when we start next week?
Yeah, I think, it doesn't take a lot when a market, is soft. Anything, like we say, neutral news is negative news. So when you get negative news, it's negative for sure. So, I think that gives a little bit of a relief rally. And I think the question mark's going to be with, the dollar coming under pressure, interest rates, feel like maybe they peaked. That are the some of these funds going to start to come back into this market versus the other way? So we'll watch that for next year, Michelle, see if we can get some interest in the raw commodities.
Yeah, let's hope that we get some money coming back into the commodities sector. But we have 1 week we have to get through before we flip the calendar. Light holiday trade next week. What are you anticipating? Is it going to be a lot of end of year type position and profit taking by these traders, especially in the grains, or what?
Well, we had January options went off the board on Friday. On soybeans was the big watch here, $13. So I think we have that behind us. So I think now when you're back at support down here, Michelle, it feels like a market that at this level has more upside than downside potential. And, certainly end users, I think, are going to be interested in buying down at these levels just because you're kind of at value. But we just continues to suck the carries out of this corn market, and $5 on July corn, we got to get back over again to find some life a bit here. And the soybeans, the same thing. China's been underneath this market buying. I think that's a good thing. But farmer movement next year, Michelle, that's going to be an issue because I think the producer wants to move some of this crop here, January, February, March.
Well, we'd normally get a pretty good flush of selling right after the first of the year just because of tax purposes, income averaging, cash needs, right?
Yeah, we usually do, but there's been a steady a movement of grain, these deferred price DP programs, which I'm not a fan of. It puts more grain in the market artificially. So grain has been coming into the pipeline through some of these contracts, which is maybe going to take some of the pressure off of that, Michelle.
Yeah. There's also a historical tendency that you mentioned to me the last trading week of the year. Talk about that one. What does that mean for the market?
Yeah, when you come back historically, when you come back on, to start the week next week, 70% of the time over the last 23 years, the corn market has rallied 6 cents. Same thing, the soybean market, 61% of the time has rallied 23 cents. So there's a tendency for the market to get a little bit of a relief rally here. I think part of it is just on the lack of selling. And I think the other side of it is a little bit of respect for what can happen with the weather going forward. It's a big, long growing season yet, Michelle. You're just moving into some of the very critical time frames. So I think we're going to be counting the raindrops as we go forward in Brazil.
That's right. We'll keep an eye on that as well. All right. Thanks for being with us, Don, and have a Merry Christmas.
Thank you. And all your listeners have a Merry Christmas.
Don Roose, U.S. Commodities. That is Markets Now.